currently are drowning in debt. And the question in most people's heads, how does this debt affect us? Right now, we are facing so many economic problems, and including a high cost of living. Should we really be focused on debt? Now, according to reports that we are receiving here, the debt of Uganda is currently at around 73 billion, billion US dollars, and that's 73 trillion Ugandan shillings and over 20 million US dollars. Sorry about that. And the debt that is eating up Uganda is also eating up its revenue, meaning most of the money we are having here in Uganda that would be probably using for constructing roads and building hospitals, we are using to service the debt. Now, the adverse effects of this level of borrowing is felt through the interest payment, which is more than over 5.5 trillion Ugandan shillings in the financial year 2022-2023, rising from over 2.4 trillion in the financial year 2017-2018. This is also coupled with the external debt repayments that are projected at over 2.4 trillion Ugandan shillings in the financial year 2022-2023, rising from 589 billion in 2017-2018 financial year. This takes first call on the revenue collection, such as the reduction in the funds and as well available for service delivery, and these of course affects and harms the way people receive services. Now, Uganda's tax to GDP ratio is 13%, and a huge tax expenditure huge tax expenditures currently have resulted in the foregone revenue for over 5.1 trillion in only 5 years, from 2017 financial year to 2020-2021. Now, speaking of the rising cost of living, the heightened liquidity pressures being experienced in the country at the moment from external public debt are aggravated by the heavier reliance on the domestic debt, more semi and non-concessional borrowing, which has led to the heightened liquidity vulnerabilities the country is grappling with. This recklessness, especially the non-concessional type of borrowing, has made public debt more vulnerable to the interest rate fluctuations and the rollover of risks and the medium term, especially the investment into huge financial infrastructure and projects. And so the debt transparency is critical for providing accountability to the general public, enabling informed decisions by the government as well as investors to understand the borrowing trends. Now, borrowing is one of the biggest issues here in government today. We've seen several government workers complain of not getting their pay on time, and definitely government is in need of money. And one of the ways government raises this money is through the treasury bonds and bills, and we would like right now to take a look at some of the listed bonds and bills right now, and definitely you can watch them on your screen. My producer could put them up, but some of these have expired and have matured, but we still have some bonds that are listed on the exchange. For example, the 156 billion bond, that is the UG12H2811224, and that was issued in 2015 and will expire in 2028. But as well, you can also look at the bond that will expire in 2024, the 153 billion and 700 million shillings. and that is also at a rate of over 14.0%. There's also another one following that one of exactly 500 billion Ugandan shillings at a 14% rate, and expires or matures in 2024 within this, of course, period, and many others that are listed at the moment. However, when you look at the market activity, according to the second quarter report of the Capital Markets Authority, Bank of Uganda issued a total of 2.6 trillion worth of treasury bills and bonds in the second quarter of 2022, and this is 16.6% lower than the 3.1 trillion raised in the first quarter 2022. The decrease in the debt issuance can be attributed to, among other things, the rejection of bids deemed to be highly priced by the investors. When you look at, for example, the second quarter in 2021, there was an issuance of over 2.8 trillion, and then in the third quarter of 2021 we had 3.3 trillion that was issued, and then in the fourth quarter of 2021 we had 2.7 trillion. That was a decrease, and then back in the first quarter it went back up to over 3.1 trillion, and now down to 2.5 trillion. I think the lowest issuance since last year. And when you look at the yields of the treasury bonds, in the primary market, the 2-year bond yield fell, while the yields on all other tenors edged upwards. The yields on the 3-year, 5-year, and the 10-year, as well as the 15 and 20-year treasury bonds, grew from averages of 12.1%, 14%, 13.5%, 14.4%, and 16%, respectively, to, of course, 12.4%, 14.5%, 13.8%, 14.5%, and 17% in the period under review. This increase in the yields is partly explained by a recent central bank rate increments that have pointed to a tightening of monetary policy of Bank of Uganda to tame inflation. And of course, that said, the 2-year bond sold for over 9.9% in the period when we look at the second quarter of 2022, compared with an average yield of 10.5% in the first quarter of 2022. On the annual basis, the yields of the 2-year, 3-year, and 5-year treasury bonds dropped from averages of about 12.3%, 12.8%, and 15.1% in the second quarter of 2021 to averages of about 9.9% and 12.4% as well as 14.5% respectively in the second quarter of 2022. On the other hand, the yield on the 10-year and 15-year bond rose from an average of about 13.7% and 14.4% in the second quarter of 2021 to an average of 13.8% and 14.5% in the second quarter of 2022. On the secondary market for the bonds, the value of government bonds traded on the secondary market increased by 67.4%, up to 16.2 trillion Ugandan shillings in the second quarter of 2022, from 9.7 trillion in the first quarter of 2022. Average monthly turnover also grew by 5.4 trillion Ugandan shillings in the review period, from 3.2 trillion within the previous period. Additionally, the government bond turnover ratio for the second quarter of 2022 stood at 68.8% compared to 43% in the first quarter of 2022. And the growth in the turnover can be attributed to, among other things, increased investor appetite for government securities and primary dealership reforms. So we're seeing that the bonds are getting more and more attractive, but still the debt on Uganda is still getting bigger and bigger. However, we still have to finance our budget, and so government has to look for money. But you can be one of the beneficiaries of this initiative by getting to buy some bonds and some treasury bills that are listed through your primary dealer, that is your bank account, or through some of the institutions that are in the stock brokerage business that can also get access to the listed bonds and bills on the Uganda Securities Exchange. When we cross over to NSSF, NSSF recently launched a smart card, and we would like to look deeply into it. Now, this NSSF technology boost is being realized, of course, as more and more people save with the scheme. The great things, of course, have happened within the scheme, with several people getting more engaged in saving for their retirement, while the role of good governance, as well as both at management and board level, as well as the subsequent great vision and strategic execution of the scheme that was ushered in after the 2009-2010 has been extensively discussed, and there has been a lot, much more attention to put on the role of technology and digitalization in transforming NSSF from a government parastatal to one of the most trusted and respected government institutions within the region of East Africa. It all started, of course, with the fund's 10-year strategic plan in 2015, which sought to transform National Social Security Fund into a social security provider of choice and a relevant partner to their customers through continuous innovation in the social security. One of the key strands of the strategy was leveraging technology to enable faster and more efficient service delivery. And they wanted to be a model of the operational excellence in Africa. But this could not happen when people were spending a lot more time in the long queues and, of course, taking more than over 105 days to have their claims settled. Now, they did a customer survey around 2014, and the stakeholders, of course, say that there's a reasonable and consistent returns. Though a reasonable and consistent return were a must, they also wanted quick accessibility and timely customer services. Therefore, excellence in the service delivery and channels and customers' relations were going to be very key to the success of the social security. At the time, only 55% of the fund's core business processes were automated, with a lot of bureaucratic delays worsened by the manual movements of files and queues. And an internal review also showed that as a result, there was inefficient and manual processes as well as procurement delays that led to lost time and cost members a lot of value in missed investment and commercial opportunities. Re-engineering the business and processes was key to delivering a new and exciting customer experience, and the target was to get at least over 70% of the fund's business processes automated by 2019-2020 and 80% by 2024-2025. Technology and digitization not only improves the customer experience, but also the data quality. And you're looking at over various people that are trying to get into the fund. And these people are looking at convenience as one of the things that could attract their services. Now, the very first technology advancement or initiative was the NSSF Go service platform. And of course, the thinking behind the NSSF Go was that customers should be able to self-service on the go at 24 hours a day and 7 days a week. Originally, members would physically visit the NSSF branches to access all services, including mere account balance inquiries. But with the growing membership, this seemed unsustainable and unnecessary. Is therefore NSSF Go was one of the initiatives that came out, and with a USSD code dialing *254#, people could be able to access information regarding their balance and so on and so forth. Now later on, we are seeing now a smart card which has been introduced, and of course digitally future-proofing the fund with the NSSF smart card, a new digital mid-term payment tool, and a robust pension system is on course to meet all the 2024-2025 targets. And of course, it has been achieved. So with this card, definitely people can be able to access their balance, they can be able to get mid-term benefits, and so many other benefits. So NSSF is moving really towards a very positive direction. And recently, yesterday, there was a launching of the houses for NSSF and so many other things that are coming up within the Social Security Fund. Thank you very much for remaining with us. That is it from me today and in this week. I'll catch you next week, same period and same time. And I hope you have yourselves a good weekend. Bye for now.